Okay, we're recording. Good morning, everybody. It is 6:35 a.m. on Wall Street, about 3 hours before the open of trading. It's time to get your quant on. Let's do QuantBox Live, where we uncover the best fundamental opportunities across global markets. Our AI-driven analysis of sentiment, inflation, employment, GDP, technical analysis, open trade positions, and seasonality. Uncover these opportunities. My name is Wayne McDonald. I've been a professional trader and investor since 2000. Before that, I was a venture capitalist, and I gave up that VC job. Was just hired as, just promoted to vice president of the firm. We took over 2 entire floors of a building right next to the San Francisco Fed. I had 3 windows. 3 windows. You know how hard that is to get politically inside of a corporation? I'm like, I had 3 windows. My office had an idiom. And I gave it all up to become a trader and an investor full time, because in VC world, you make a bunch of stupid bets. You hope one of them pays off within 5 or 10 years. You don't even know if it takes you 5 years to figure out you lost money. So anyways, how terrible is that? One thing about trading and investing is you get instant gratification or sorrow. So anyways, what I've done as a macroeconomist, QuantBox is the automation of all the deep dive into the data. So you got to go to the CFTC and pull this data. You got to go to the Fed. You got to pull this data. You got to go to the OECD. You got to pull this data. You got to get candlestick data from those providers and more. And you got to go into all these databases, pull them all together, and you know what you get? Tables. Basically giant layer upon layer upon layer upon layer of spreadsheets, for lack of a better word. And you're like, it's just gobbledygook. A human mind isn't totally incapable of looking at all that data and make it into something that it understands. And so that's the next level of power for QuantBox, is that we can put it all together and aggregate it and say, hey, let's look at the fundamentals, right, of this market. Let's look at the technical trends. Let's go back 20 years and see what usually happens. Let's look back the last 5 years and see what usually happens. And then let's compare to what's actually happening now, so on and so forth, in a way that a human mind can easily comprehend. A lot of money went into oil. See, I can see that. A lot of money went into gold. I can see that. Euros 50-50. I can see that. Now it makes sense. Okay. A computer wouldn't want to look at it that way, but we do. And that's the power of QuantBox. But of course, the return on your investment as a subscriber is that when you're on a good trade, you have the confidence to let the winners run, because you know why you're in your trade and you know why it's working. So if you're watching this on YouTube, you're watching this video many hours late. Why don't you swing by quantbox.co, take the $8 trial? With that being said, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus in the long term, and never risk money you cannot afford to lose. Logging into the database. Wow. So, we are running into the period of seasonality for the S&P 500. Hopefully, maybe, I can't say go up, but it's the time of year to maybe seriously consider accumulating more of the asset. So full disclosure, I've been saving, right? That's the whole point of finance, right? Saving. I've been saving cash to deploy, in particular, into the US stock market. Dow, S&P 500, NASDAQ are the ones that I'm interested in. And Of that capital, I've deployed 2/3 of it, increasing my holdings of the US stock market by about 12%. I did it, well, let's just say in the last 24 hours. I don't know if I'm right. And I call that my catching a falling knife fund. It's down and it's not up, but I've been saving to accumulate at lower prices. And I'm going to hold these positions for 20 years. So if it falls another 8%, boohoo for me on the short run. But nonetheless, I will deploy more capital. I have more. So that's the thing. 2/3 of what I have been saving, I deployed, but I'm actually going to move some more capital. It's just in a bank account. It's not in the investment account. So, anyways, there we are. There we are. There we are. So pray for me. Pray for me. But nonetheless, let's take a look. Yields are like, look at the yield on the 10-year. That's amazing to me. I know you every day I'm amazed, and we all know it's probably on the way to 5. But it's been so long, decades since we've had yields like this. Amazing. Oil's back up. You know what it did is it dropped down to that 21 yesterday or the day before, and it held. Game on. So we can take a look at that, or I think we should, right? Obviously, we want to look at that. Gold way, 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 way down, not all the way to the double bottom. Okay. But remember, there was kind of 2 periods of serious interest for gold. One is the 3rd week of August, and the other one was 3rd week of September. Hey, it's 3rd week of September still. So, anyways, we'll see. We'll see. It's kind of interesting if it can come down and double bottom. I don't know. Maybe it presents itself. I don't know. Okay. So we'll see. S&P 500 had a bad day. Okay. I bought after the drop, not during the drop. Okay. Cool. So it fell another 1.47%. And now at that level, I'm long. All right. Euro dollar and Bitcoin. Okay. Notice that we're well below 6 now. That shows that dollar strength is still there, but Bitcoin's up against the dollar. Like, what? So I think we're going to start to see capital being deployed. We still have big news this week, but nonetheless, I think the timing for people to want to invest is here. And if you're a buyer of an asset, don't you want to buy it when it's low? I'm talking about investors now. Maybe not a trader. A trader will say, well, I'll wait for the next MACD cross. Okay, fair enough. That's cool. But to others, they're just saying, I usually buy stuff now, and the stuff I usually buy is down 3, 4, 5, 6, 7%. Cool. Okay. So we want to see this rotate over. We're not there yet, but I'm expecting in the next 7 days that this moves to neutral and then maybe even bullish. Got to look at the scatter plot and see how things are today. That's pretty long term, right? Looking monthly and weekly. We can go out to today. Let me expand this for you. Okay. Generally flat, but maybe I'm reading into this and seeing what I want to see. I'm looking at it like this. You're like, but Wayne, it could be that way. All right. Well, all right. Yeah, it's true. So I don't want to be too much biased towards what I want to see. Maybe it looks like a smile curve. Maybe, but remember, everything down here, okay, is as expected, and everything up here is as expected. And look at oil, barely even fits on the chart. It's so bullish. Okay. And then it's these things like Bitcoin is up, NASI's up, and not quite expected. I'm wondering if this is a shift both in like market forces. If NASI's up today, really, that's risk on. Bitcoin, okay, if the market turns more and more bullish, and this is what I'm hoping, it's been terribly bearish for weeks on that. Well, maybe we will start to see a rotation from bullish market sentiment in bearish market sentiment into a bullish one. So we want to see UK up here. We want to see S&P 500 up here. NASI's already up there. We want Bitcoin this way. These things seem to be doing all right. Although, okay, these dollar pairs would probably weaken. So what I'm saying is maybe quantitatively over the next 3 or 4 or 5 weeks, things will shift, but market sentiment will always shift first, right? Because remember, traders and investors, the humans, are thinking 6 and 12 months in advance. The machine is just looking at now and the past. So when we get new GDP numbers coming up soon, the machine just plugs it into a row and says, what's the average over the last 5 GDPs? What's the average over the last 500 GDPs, right? It's just looking backwards and adding a new data set. Humans extrapolate that, interpret it, and say, aha, that means next year higher. So the market sentiment is going to be more, is going to, let's say, be more volatile and lead. Okay. So you will see when you look at things like the scatter plot, it's actually incorporating the human as well as the data. This is the machine. This is the human. Okay. So anyways, someone bought a whole bunch of NASDAQ. The machine doesn't like it yet. Things might change. Okay. So anyways, humans versus the machines. Well, you know what? The machines are, they work for us. Remember, this is all automated. There was a time when you couldn't even do this analysis. It was too complicated. Cool. So here we are. S&P 500 is way down. Why is NASDAQ up? That might be an opportunity to sell, or this is an opportunity to buy. You need to make a decision. Okay, looking further out. Oh my God. Yeah, these yields are just amazing. Okay, Swissy. Lots of things with Swissy on them. Remember last week, after the Swiss National Bank paused, spent a lot of time explaining why that Swiss franc was likely to stay weak. Now those pairs are some of the best performing assets. Kiwi yen, okay, doing all right. Dollar, is it going to get to 150? That the high 149.23, maybe. And then I might, if I remember, I'm going to pay attention to some of the exotics. They're like peso, for example, is at an interesting price. So I'll try to remember to do that. In fact, why don't we do that now? Let me get out of there. Oh, and I forgot to mention today is the fourth quarter outlook. It's today, noon, in just a few hours. What, in 6 hours? 5.5 hours, 6 hours? We are doing the fourth quarter economic outlook. Going to look at dozens and dozens of charts, not technical charts, fundamental charts. And we'll get a better sense of how things have changed over the last 3 months, and then try to decide, or at least you'll be able to center yourself on the map and try to figure out what you intend to do over the next 3 months. Okay, are things getting better? Are things getting worse? But anyways, it's a lousy $10. $10. And during this session, I'm going to make a surprise announcement. So you definitely want to be there if you can. Okay, QuantBox, QuantBox.co. All right, let's get this down here. And let's move away from Brent, but let's look at oil. We got to do oil. This is what I was talking about earlier. Maybe I did it on camera. Maybe I did it off camera. I don't remember. But you see, down to that 21. Boom. Huh? Bet on the trend? Daily 21. It's too simple, right? It's too simple. You're like, Wayne, I don't believe in moving averages. Somebody told me, what was it, last year, the year before, they're like, oh, I don't believe in COVID. You, what? It surprised me. What do you mean you don't believe in it? I don't believe it. I mean, you don't believe it. Like, what do you mean you don't believe it? I don't understand why you don't believe it. You don't have to wear a mask. You don't have to get vaccinated. You don't have to do whatever you want, but it doesn't exist. No, it doesn't exist. I'm like, okay. So, anyways, you don't believe in moving averages. What do you mean you don't believe in moving averages? Anyways, there's a moving average. So I don't know what your belief about COVID. So, anyways, I was still shocked. Okay, wick down, but also look at what about future pivot points? The October pivot points, right? There's your M2. Oh my gourd. Oh my gourd. Holy smokes. So that puts us on our way to $98.90. But that's not locked in place. So it smells like 100 to me, doesn't it? If we have some more up by the end of September and the beginning of October, these are going to lock in place higher. And it looks like if we're going to extrapolate, okay, let me try to zoom in here and get this a little better. Oh, that's too much. Okay. If I'm going to extrapolate this out, it kind of looks like, oops, wrong one. Kind of looks like this: up, down to the 21, M2, up to the M4. But if this is going to go higher, this is going to go higher. So yeah, $100 in October. Yeah, that's what Goldman Sachs said in May, by the way. Okay. May or June. I remember talking about it with you guys. I'm like, yeah, very cool. So, anyways, that's Oscar Mike on the move. Okay. So, about 36 hours ago would have been great. I babbled on a little bit about gold. Let me show you the bottom I was talking about. Let me get it a little more precise. And we're on that number right now. And then you incorporate that lowest low. Okay. So who knows? Okay. We'll get rid of this. This is irrelevant because it's beyond a 786. And well, I'll leave that there. That's an old trade plan. If this holds, then okay, we had this old trend, this area here. If it was going to trend up, then so now we have a new if then statement. Okay, if this is support, then be careful. If you're a bear, you might want to take some profit. If you're a bull, okay, it's time to look for reversal patterns. Now, gold is a complicated one. You know, but let's just leave it at technical. If you wanted this asset to go up, you would look for something like this. So it's probably too early to buy. And if you're a bear, selling now is probably not a good idea. Where were you up here, right? Remember, bears can sell double tops and lower highs. Bears cannot sell lower lows or double bottoms. Okay. So we get into the point where bears could take some profit and bulls could go long. And if they do, this is the plan you want to look for. And if they don't, you should stay out of the way anyways. If it makes a lower low, you can sell the lower high. But I want to point out super important key price. Go. Bitcoin, yeah. I guess I got to do this S&P 500. So, quite a while ago, I don't remember when, I've been pointing out the numbers for S&P 500, and I said 4,300 could be interesting, or 4,200 uh, for buying. Let me do it again. Okay, this area here is interested for buying, and this area here is an area I'm interested in buying. Cool. So the next move could be down, and if it reverses, um, I buy even more. But I told you I'd consider buying in here, and I did. Yep, I did. You're like, I don't see your, and not on this chart, not on this account, not on my, right, not my forex coaching account. No, but in my retirement account. Yeah. And for those that are in my CIA group, I'll show you later. I'll show you later. Yeah. Cool. All right. All right. All right. All right. Well, I wanted to show you those exotics as well. Particular peso. Wait, is that the right number? No, there you go. I'm like, what? Okay. Do, do, do. Let me put a fresh chart on this. Let's just do a freshie. We could do a freshie, like clean it up here. Just do monthly. Okay, cool. Definitely trending up. This way, if you make the investment, and if you do that, you're going to collect a high yield. Okay. So what you want to look for in a carry trade is this for next month. To look for that is next month's M4. So this M4 is the training course at Investor Bootcamp shows you this trade. Okay. And so anyway, so now we know if bears want to sell this, they can only sell a double top or a low. Take a shot. If you're already a bear. Notice this all starts with research. because then you know why it typically rotates this way. Well, you're like, usually dollar weakens based on my research. That's probably a rotation from the market going risk off to risk on, which means they want a higher yield, which means they want the dollar weakens as money leaves the United States looking for higher yield. Mexico is your yield play? Could be. I don't know, but this would be your narrative. And if so, right here and right now, you might not be selling this, but you're ready, willing, and able. You're zoomed in mentally and emotionally to take a shot if it appears, versus waiting for it to happen and then say, oh, I should have done that. No, no, no. We're trying to be ready, not responsive. Okay. You don't want to react to stuff that's already happened. Okay. You want to be ready. Now, more conservative side is to take the idea a little bit, have it reverse, and then catch the lower high. And you're in more like here, almost the same price. So let's say it goes to 1770, drops down to 1725, rises up to 1750, and then you end up selling it at 1750, and your target is 1650 or lower. And if QuantBox tells you this might last 2 months, then yeah, you're thinking probably quite a bit lower. So you're selling at 17 and a half and you're going for 16 and collecting high yield along the way. Would that happen? Will that happen? We don't know, but that's why you need to do research. Hard to be ahead of the curve if you don't know what's happening or why it's happening, right? You're either lucky or a victim. Okay. So we'll leave it at that. It's going to be a great day. We got some big news tomorrow and Friday, so the market is going to move. But of course, today at noon, just a few hours away, we're going to do that Q4 outlook. And like I said, I got some big news. Hey, do boo boo. Yep, I got some big news to let you know about. So schedule time. Prizes. I'm not a big believer in prizes, but I did buy a prize for the CIA group. Yeah, I did. But I think I said you have to go to the live event in December in Nashville, Tennessee to get it. Because I want you to be there so that we can have a steak dinner and all that kind of stuff, right? So anyways, this is a cool toy. I'd like to keep one for myself, but I'm not. I don't know why. I'll end up buying one for myself, but I'll give you this cool toy that only a trader would want. That's the cool thing. Everyone else would be like, that's cool, but it's stupid. You're like, that's cool. I want it. Cool. So anyways, I'll let you know what it is when we're in Nashville. Peace on earth. May the pips be with you. May your profits be above average. Cheers.